Hello, welcome to today's analysis of the NQ. This video was requested by somebody in the community, so I'll do my best to deliver. Today we're going to look at more macro stuff, bigger picture things. We're going to, for TA, we're going to really look up to the 8 hour. I'll probably stop around the 8 hour because that's where my main kind of demand is. It's where my main level kind of is, what I'm watching. We'll also look at supply that we have, both in play and supply that could realistically get hit, um, and maintain a certain narrative. So we'll go through all that, and I'll briefly look at the weekly, the daily, and the weekly, and give some levels that I can see, and they're just levels that I've marked from a very long time ago, but very high time frame stuff is it's a bit different. You have to kind of approach it differently. A lot of economics and stuff can influence it in a way that TA can kind of get a bit lost at those higher time frames, but it's worth being aware of them. So we'll have a look. Just as a refresh, right? Where are we in the big picture kind of thing? And I'll briefly look at the yen. Just quickly look at the yen. And I made a video on an indicator, yen carry trade ratio, I believe it's called. Yeah. I made a video on that recently. I'll be looking at that indicator a small bit today. So if you're curious about that, then you can go watch the last video that I put up on the channel. All right. So where should I start? Okay. Let's just take a look at the. All right. Let's take a look at the 8 hour. Right. There's a lot of things going on here. What can I clean up? All right. What do I need? What do I really need? Well, I mean, it's all there for a reason, isn't it? Okay. Let's just remind ourselves where we are. All right. What I'm going to do is I'll open up the NAS 100, which is just a very clean kind of daily time frame chart, and we'll have a look at that. All right. So let's go to the top. Okay. Here we have the NAS 100, essentially the same price action as the CME. I normally use the CME for trading, but when we zoom out to the daily, besides some little discrepancies, it's essentially the same idea. Let's get rid of these things. All right. So what do we have? Well, obviously, on the daily, we're on the top of this kind of extended leg, this push up, very, very large break of structure, right? This was last year, right? Just been pushing up and up and up. Here we had a notable change. I have it marked on the CME. If you can see here, we had notable change a while ago. With that's marked by this. This is a whale. It's like a very large structure. We had this change of character. We pushed down for a while. Everyone got very scared. Got bought up. And then we had this kind of poor attempt at closing high and achieving some sort of internal change of character, marked by the little squid. Sorry, I'll hide this. Marked by the little squid here. And then we ranged for a while, took liquidity, and then came up and interacted with this high, which is the last high before this change of character. This larger change of character came down, hit an external liquidity point, also a wide structural point here. This is the very high time frame structural points. You could also say this was a break of structure. it's fine. It lines up, but I'm using this one. But anyway, we tapped it. We got some demand coming in, change character a bit here, ranged around. Had this huge swipe up into this area, and then had a large reaction down. So now we are essentially, we're keeping an eye on mostly this relative to where we are, right? Obviously, we're bullish, for this whole leg up, but relative to where we are, we had this large change of character, had this kind of swipe, and then came up into, I would say, external liquidity point. And then we had more kind of displacement down, breaking internal structural points. And now we've come back down into this demand area. Okay. So essentially what we have is, span, build liquidity above, grab the liquidity here, which also happened here, span, grab the liquidity below. And now we're sitting in between this supply area and this demand area. So which do we favor? Well, I mean, that's a question, and that applies at a lot of different levels. Not levels like this, but a lot of different dimensions, I guess. It also depends on the time frame. But essentially, I'm aware of what can happen. The levels that we have marked below, and all of the liquidity that we've built here on this push up doesn't mean we have to come for it. But I'm always aware that we can come down into these areas, and it essentially doesn't change the macro narrative, right? We have this very large grab, this very large structural point up, just the same way that we're playing with supply and demand. Up here, we can play with supply perhaps being this, and demand down here, right? Right now, because we have this change of character, this nested bullish change of character didn't provide any follow through. Demand didn't come in higher and higher. We didn't break above this point, and now we've had another nested, many nested breaks the structure down. Overall, I'm keeping my eye out up here as a supply point, to then perhaps come down and break structure. So we'd be looking at a retrace, right? Perhaps distribution again inside, and then another leg down, right? Perhaps. Doesn't mean that has to happen, but they can do that and maintain this whole narrative, right? This, a lot of people would be like, oh my God, it's going up, it's up, 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 up. Oh my God, we're going to go for a new all-time high, which I'm not sure is going to happen soon. But get a lot of orders up here, depending on how steep this is built, how we take liquidity coming up. I think that would be a good lower high. So what could bring us up there? Well, I'm really looking at this 8-hour demand. So you'll see down here, I know there's a lot of markings on the screen, but bear with me. I have this, it says 8-hour, right? This is just a fib level. It's a fib tool with a 50% marked in red. And this is the red vector that interacted with this block. It's an 8-hour block, led to this weak change of character, but it was still a change of character. And it seems like we're getting reactions off it. Now, we had a reaction off it here, granted. Yes, but it's not exactly what I'm looking for. I'm looking for specific candle formation to come in at this 50% line, and also see other things, divs, money flow, looking at the yen as it's going, what liquidity we're taking, all of those other good things. But I'm essentially watching this area, because if we start to gain footing around here, maybe swipe and come up, I could see us, depending on how we move, using this as a spring to come back up to supply and then see where we are. I have a couple of levels until then, sorry, up until this point that I'll be looking at. One of them is marked by this 2-hour bear MFI. We don't have to come all the way up to this 8-hour order block at all. We could swing here and come back down. I'm looking at this level, like the look of it. But we could also just come up to this 8-hour OB. Now, is there a potential for us to do this and then consolidate for a while and then come up and make a new all-time high? Of course. But until then, until I see how price looks on the way up, how we're looking up there, what happens, I'm going to go with what my data is telling me, and that we have another leg down eventually. Now, could we just roll over from here? Yes, of course. In my eyes, this 8-hour demand is getting used and abused, and we would like to see, I would like to see it actually start doing something in order for me to start longing this as it's going up. You know, I'd like to see what I want to see. But if I start to see what I don't want to see, then we could start coming down, of course. Now, essentially, my supply and demand areas are both 8-hour supply and demand, essentially. How I get to those conclusions is through my own way of looking at the chart and causality and vectors and all of that good stuff, but I won't get into that here. I won't get into how, I'm just kind of showing you what I see. This was a full bear div as well between these 2 points, noticeable. Yeah. We have a psychological level here, 25,500 on the CME. Yeah, it's just a nice liquidity area. We have a few points that we can hit here. This would be a very nice supply zone. And I guess what I'm saying is, you know, when you go up to the daily and stuff like that, it's kind of hard to be confident about macro highs and lows and stuff like that. The highest time frame that I like interacting with that gives me something palpable that I can actually trade and perhaps then hold as a swing is the 8 or the 12, mostly whatever one is showing me the active supply or demand area, which would be 8 or 12 in this case. What about the 12? Well, I wouldn't be overly fond of the look of the 12 because of the way I look at the chart and the blocks that are being interacted with. We have a 3-day block here, which took liquidity, and we seem to be struggling to, again, make recovery of this area right now. And this block has been really, really used. So for me, the cleanest, most visible demand zone that I can see is this 8-hour block, which was responsible for this grab. It also hit a weekly order block. You know, it was just a strong area, and I'm seeing the most feedback in the zone. So I'm going to look at the 8-hour. All right, so if we break down, what is there? Right underneath us, there is a daily breaker with some green vector recovery. Nice past daily VWAP, point of control. We would be coming deeper into this consolidation, which, as you'll remember, is the last break of structure before our macro change character, with very, very nice liquidity taken. Very nice point here. SMTs, everything. This was a great job by the market makers of filling all those orders, I believe. So we could come down into here and base out. You know, we're right above it, 24K zone. The thing is, breaking this low, you know, if we really start losing this area, especially this consolidation. What's below us isn't amazing. If I'm going to be honest with you, losing this zone, like, I think the market would kind of crap itself, honestly. Um, we have some weekly levels down here. Let's look at the week. This is gonna be messy now because I have so many levels marked. Um, some gaps here. Weekly fair value gap. It's above this point of control. 22,450 or so. There's a weekly block here as well. The thing about this zone is we have price gaps and everything right below. Not a lot of volume here. We have some gaps, some volume gaps down here that we could get interaction from. But my most extreme point that I would be looking at, if we did start to break down and it was showing no signs of any healthy upwards movement, would be around this point, around 20K, 250, and then failing that, it's kind of hands off for me down here. We have a weekly order block, green vector recovery, but at that stage we're coming into a monthly hammer green vector wick, and that is touchy, very touchy. So I wouldn't be rushing to any trades here. Definitely could become a very nice demand for, like, I don't know, a weekly range, but that would be, yeah, you'd need some heavy weekly accumulation if we came down here, kind of thing, you know. So yeah, I guess like in a year. But you see, you can't predict that at all. I just have the level, and I know how I feel about the level, and it doesn't. I'm not saying I know how it feels. Is like, oh, I feel like I should long. It's like I've done. I'm familiar with the level. I'm familiar with how it relates to the rest of price, and once price comes there, I'll be I'll already be aware of it. I'll be ready to do some deeper analysis, more real-time analysis, and um, make the judgment. This is just prep, and I leave these bigger levels on the charts. They've been here since this push up, and I just leave them there. Um, but we don't know how price is going to interact. It could cut through everything. So that's why I just like to focus on these kind of time frames: 8 hour down to 45 minute, 24 minute, and then we have your execution time frames. Yeah. Should we? Okay, so we should look at yen, I guess. Let's come back up here. Okay, this is the yen at the moment. Let's look at the 12. We had a change of character. We're hanging out around here. We've just widened this range on the yen. Came down, we mitigated an area, hit a breaker, pushed up back into this demand zone. This could start widening into a range. But at the moment, we're hanging out just above this structural point again, and we have had higher demand come in, which, we have internal money flow divergences, sure, granted we do, but we're seeing demand come in higher around this point, around this candle here, just ranging. The indicator itself is, so you can see that I have up marked here, and it's neutral here. It's because you can't just use any old movements to track this indicator. They have to be causal. They have to be related to structure. The yen isn't breaking down right now, so I'm not wildly longing, right? If we did break down structurally and we got nice, strong bursts, divergences on this indicator, then maybe I'll start looking at my 8-hour on the NQ, see if that lines up, and you know, take action then. Whether this is a distribution range or reaccumulation, we have this wick down here that we could come into and then see some support. We do have a lot built below us, and remember, we have widened this range a huge amount. We can spend a lot of time in here. But right now, nothing clear with clear conviction for me with the yen. Overall, yeah, it's just ranging. So even this indicator, it's not showing clear signs. You know, it's just ranging at the highs, local highs. So this tool I have here is a 45-minute. So the 45-minute seemed to have something causal. You know, it's whether we lose this wick, really. Like, and I mean lose it, you know, start coming down, distributing as we move down, selling, and pushing back into whatever levels here. Yeah, it's that interaction I'd be looking for. That's structural change along with the indicator showing me the good stuff. So yeah, I mean, that's the best I can do macro-wise, honestly. Don't use the NAS 100 CFD chart if you can. There's a lot of things here that are misleading. A lot of flat areas that are not flat that the CME took. Just be aware of that. Which, with the way I trade anyway, has causal implications. Up to the daily anyway. Yeah, that's it, guys. That's the best I can do for you right now. What are we looking at? What are we looking like here? On the 45. Let's have a look at the 45. I had some good trades today. As I said, I'm focusing on this 8-hour level, which is 24,600. I'm looking for something specific here, and if I see it, I might take a pseudo swing all the way up to that 8-hour, or at least this 2-hour level, 25,600. It'd be a $1,000 move on the NQ if it was going to happen. I mean, they're inducing 25K as well, it seems. What happens if they don't come into my 8-hour and they keep pushing up? Probably just scalp longs if I see them. I'm really looking at this level, and sometimes the way I trade, it requires me to just wait hours or days, multiple sessions, especially when we're in like macro supplier demand. Like, I'll take a few scalps, but until my levels get hit and I have a clear understanding of where the market is to the best of my ability, then sometimes I just have to wait. And yeah, sometimes that's just the way it is. We have a green vector at this demand area. So I'm really looking for something specific here. I don't have I don't have wide tolerances for what's happening down here because of what we've done, because of this situation here. It's not the way it's not my optimal scenario for this demand level. So I want to see very clear, specific things. Yeah, so I'll give you an update on this 8-hour demand zone situation in the future. I guess when we either start breaking down or breaking up. But macro-wise, that's the best I can do. All right, I hope this helped somehow, in some way. If you want to see how I use the yen indicator, there's a video, as I said. And yeah, happy trading, guys. stay safe in these widening ranges. And see you soon.